Welcome to the course How I Consistently Beat the Stock Market, a practical guide to outperforming the stock market while outsourcing most of the effort. In this course I will teach you how to beat the stock market, and I will do this not only by instructing you in how to perform your own due diligence, but also by showing you how you can outsource most of the effort. Remember, we are nowadays in the information age, and all the information is available somewhere. I will show you where to look so that your analysis of the large available pool of analyzable businesses becomes a small fishing pond that consists of almost no other businesses but extraordinary businesses. In this course, I will guide you through the initial filtering of the several thousands of publicly listed companies so that you will have a small bunch of stocks that are worthy of further research. I will then show you how you should analyze these stocks from a business-oriented perspective by introducing you to the investment principles several of the greatest investors of all time adhere to, and which I adopted myself over the time I have invested. I will try to give you as many practical examples as possible, so that you as well develop an intuition in recognizing outstanding companies. We will talk about what it means to invest and simultaneously protect one's investment principle from downside risk, also called investing with a margin of safety, which is the ground rule of the value investors of Benjamin Graham and Warren Buffett. Their first rule is not to lose money, and their second rule is to not forget the first rule. I will show you which business-specific characteristics you should look for, which financial metrics point to an outstanding business, and how you can see if a company is well managed. And I will point to several possibilities in how to outsource most of this. In the first introductory lectures, I will already show you an easy way in how you can beat the stock market. And remember throughout the course that even though this way will definitely allow you to beat the stock market, the majority of fund managers actually fail in beating that same benchmark. You actually have the advantage that you are not an institutional investor and that you do not have to adhere to too many rules. And that you can sometimes just follow the easy way. And there does exist an easy way to beat the stock market. But that is something I will already explain to you in the introduction. As it is not my intention to just show you how to beat the stock market, it is my intention to show you the investment principles that, if followed consistently and over a longer time period, will get you in a range where you can strongly outperform the stock market. Do note that truly investing is a long and exciting path where you have to be a patient long-term investor, and you should always approach the stock market rationally and use its volatility to your advantage. I am merely here to show you how it can be done, and if you are up to it, how you can start trying and doing it as well. This course in specific is suitable for both defensive and for enterprising investors, and depending on the level of effort that you are willing to put into your due diligence, this course provides you with several useful investment principles and guidelines. There isn't a specific level I believe you as a student of this course should have. You will generally be able to learn a great deal, so see for yourself, and if you would be disappointed, you can always deem your money back. Although I hope you will find value in this course, because that is why I wrote it. The investor that follows this course should have a mid to long-term mindset, which means several years. In 1 year your investments could pay off, but that is not how the stock market works. Of course, there does exist short-term trading, but that is now really covered in this course, even though most of the discussed principles will apply there as well. This course aims to treat investing the way Warren Buffett stated investing should be treated, and that is, and I quote, "Investing is most intelligent when it is most business-like." So that is exactly what we are going to do. Not look at stocks as speculative instruments, but look at stocks as part ownership in great businesses. Businesses that, if we were able to, would want to own completely by ourselves. I try to make this course rather practical, which means that there is a lot of material that a student should immediately be able to try out for him or herself. For instance, specific investment principles, platforms or website where the student can go to, and so forth. Next, There does remain the question of how much effort you are willing to put into your due diligence, and there can easily be determined three variants. If you wish to go for the low effort way, you can typically invest in ETFs and rely on the dollar cost averaging technique. I will explain this in some of the next lectures. Next, if you are willing to put in a medium effort, you will benefit greatly from everything that is discussed in the remainder of the course. The nuance here is that you should then aim to get others to do most of the work for you, and I will explain to you how you can do this. And then there is the high effort way, which is similar to the medium effort way, only that you do most of the due diligence yourself. Now, whether you are aiming for value stocks, growth stocks, turnaround stories, M&A candidates, or anything in between, this course can give you a good starting point on where to look and what to look for. For me, the greatest reward would be that you finish this course with the feeling that you have learned a great deal and that you have turned into a better investor.